Well, thanks for joining us. I'm Marlin Bohling with you as we have our trading day underway on the futures market in Chicago. Here to help analyze today's activity, turn to the gentleman right next to me, Mr. Chris Swift. How are you doing?
Doing great, Marlin. How are you this morning?
All right, doing fine.
Good.
Of course, Chris is with Swift Trading Incorporated in Nashville. I want to take a look at our grain trade and see what Chris thinks of our current market activity. Let's go to the corn board and check it out. Right now, a little weakness on the nearby contracts. We have the May down just one tick. Whoops, I say that, and then it goes higher by a tick. So there you go. It's just either side of unchanged by a little bit today. Now, 385.5 on the May. We have July unchanged. New crop December up 1/4 cent at 404. Make it 404 1/4. Now it's unchanged, so can't get any flatter than that here, Chris. The market's kind of sleepy heading toward that report on Thursday.
Yeah, I think so. We noticed that they're having some issues still down south in South America, trying to get a second corn crop in over their beans, and that's a little bit slower, so they've begun to reduce the amount of corn acres being planted for there. And it's just a pretty soft week with the crop production supply demand report coming up on Thursday. People will kind of be jockeying around for positions in front of that.
Okay, you and I were talking in the green room a little bit ago about this soybean market, and let's go ahead and pull up the soybean prices for our viewers, and I'll read a few prices here for our listeners too. Let's go ahead and take a look at soybeans, where we have the May now up a penny at 10.72. Now this is interesting because overnight we had a low of 10.66.5. Had a high of 10.78 already, fairly volatile, but you wouldn't know it by looking at the current prices where it hasn't changed a whole lot, only about a penny. September up 3 1/4 at 10.57, and again, if you look at that new crop November soybean chart that we have, we will notice that trend that has been taking place in the soybeans for quite some time on the soybeans. That's been quite a rise here, Chris, in this new crop soybean market, and I'm understanding that a lot of hedging is being done ahead of time to kind of reward this rally, if you will. Sure. Right now we're at 10.35 3/4, so we're still down 2 1/4 cents. But boy, that is quite an impressive chart there on the soybeans. It is, and basis is narrowing up, trying to attract more beans into this rally right now because they're needed. The crush still remains elevated, and the soybean meal traded above $400 a ton last week. So we've got some real movement. That's a little better than a 25% increase in the soybean meal price that we've seen over the last 6-7 weeks. Let's see what soy meal is doing right now. If we can pull that up on the screen right now on the soy meal, it's going the other way here, Chris. We have the May contract down $3 at 389.90 per ton at the present time, but it looks like the nearbys are loaded more on the downward side here on the meal market, at least for the time being here today, while the soybeans are holding up. Sometimes canola gets kind of caught in the middle of all this crossfire here, and right now the canola is taking its lead apparently from the soybean trade today. We have the May contract now up $1.90 in Canadian currency. It's at $5.29 even per metric ton. So canola market definitely higher on the day today. Let's switch over to the wheat, and in Chicago wheat, right now, your May contract is up 4. That's a bit of a surprise from last night's trade. 5.04 even per bushel is the last trade. July up 3 1/2 at 5.18, and that is about 5 cents from our high last night, but it's about 9 cents off our earlier low from last night. Now on the Kansas City wheat, let's take a look at May, where we are now 4 1/4 higher at 5.38. That's a little over 8 cents off our overnight low. We have July now 4 1/4 higher at 5.54 1/2. Dryness continuing in the plains. Yeah, it does. And as we saw the weather map, it's raining everywhere but in the wheat belt right now. So all right. Let's take a look at the Minneapolis spring wheat trade. Here you go with the May contract, now 2 higher there at 6.22 1/4 after being as low as 6.16 1/2 overnight. And now July is 2 1/4 higher at 6.30. On the cotton trade, there was a big push higher this morning in the May, still up 118 points at 83.27 per pound. And now you have that new crop December actually gaining 22 points, and it's trading at 77.27 per pound. That's only 1 point away from its high of the day so far. Interesting trade in this cotton market too today. All right, we'll come back in just a moment, and we'll be talking more here with Chris Swift of Swift Trading, and we'll talk about the livestock trade when we come back. All right, we're back with you as we examine our livestock trade here. Let's go ahead and take a look at our live cattle market. On the futures in Chicago on the CME Group trading floor, now we are higher. We have the April contract now 31 cents higher. Check that, now 25 higher at 122.42 per hundredweight. Right in the middle of our trading range today. We have the June contract 28 higher at 114.68. August 28 higher at 112.38. And if we look at the feeder cattle trade, right now on the feeders, you have your April contract now 47 higher at 145.75. The May now 33 higher at 146.85. So it has already lifted by looks like $1.40 now off our earlier low this morning in that April contract on the feeders. Let's turn again to Chris Swift of Swift Trading. What would cause that kind of a rapid knee-jerk reaction there? Almost $1.50 in the first half hour to 45 minutes.
Well, and there's lots of things. There's a lot of volatility going on in the meat markets right now. Clearly with the equity markets volatile as they are, everybody has questions in their mind as to how well this economy is going to continue to be able to perform at the current pace it is going at, and will it be able to stay that way? And if it does, then we will continue to be able to absorb the supply that is out there, and if it just starts to mediocre, then we know we always have more supply coming than what we have really demand at this time. So it could still be a little negative towards the prices of both hogs and beef as we move forward here.
There used to be an old perception in the market that if the stock market, you know, the Dow went higher all the time, that was supportive to the cattle trade. Maybe there would be more demand for steaks. Do you think the reverse is true here, where the Dow has sold off recently? Do you think that is kind of hurting the cattle market right now?
Well, I think a lot of stocks may be still done on margin to an extent, and with the cheaper money that we have had over the years, it made buying stocks a little bit less expensive to be able to do that. Now we've got a reversal. Now we have the equity markets that are not going up every single day. We have higher interest rates, and so it brings some question into people's mind of the ability of the market to continue to perform over and over and over again like that.
I see the Dow is down about 97 points right now at 24,440. All right, and I believe it had been down like 140 or something like that this morning. Your thoughts on the lean hog trade? Let's take a look at lean hog futures here, Chris. And on the big board in Chicago right now, you have that April contract. It has traded 20 higher at 67.78 right now, and the May contract is 20 higher at 74.85. Kind of uncharacteristic on that May contract here on the lean hogs. My goodness, we have a trading range of only 30 cents.
Yeah.
I mean, we've had a $1.50 swing in the cattle, 30 cents in hogs here.
Yeah, it's pretty slow and sluggish starting off this morning, but first quarter production is going to be large for hogs. Second quarter production will be even larger. And we have a tremendous amount of competing meats to have to go through right now for these next 2 quarters. And I think although we're seeing a little bit firmer today, they probably won't last that way through the end of the week.
I'm looking at the spread between April and, well, let's pick out that June contract. I mean, that's over $12, $12.20 right now, isn't it? Between those two, do you think that has to narrow up here anytime soon?
No, it does not. No? As a matter of fact, it could actually widen even further.
Really?
That's a very historical trade, be long June, short April. They used to call it the old ham sandwich trade. But yeah, that's what it is. And that was one of the very first trades I ever made. Actually,
really?
Was the ham sandwich trade.
Ham sandwich trade.
Yeah, long June, short April. So
you never cease to amaze me. I learn something every day. All right. Well, thank you very much.
Absolutely,
appreciate it.
Martin. Thank you.
All right. Chris Swift of Swift Trading Incorporated, and he's based right here down the street.
All right. Thank you, guys. That was a good one, too. I'm going to remember that. And he will, too.